Countries are teaming up to distribute gold. Is crypto really going to transform from speculators to regular troops? Bitcoin stabilizes and Ethereum flows back. Is the bull market accelerating? L2 technology is booming, and the US SEC warns against turning it into an exchange. The interest cake is distributed to currency holders, so are the banks worried? A piece of official document takes effect immediately. How serious is this supervision? Jack Ma says blockchain is powerful. Does Ant Group really not like encryption? Or is it secretly accumulating strength?
Wednesday, September 10th, BitcoinTV Chinese channel. Where is the coin chain? I'm Michael/Dongdong. First, let's take a look at the 24-hour cryptocurrency headlines. Governments around the world have been really banding together lately. Vietnam has directly approved a 5-year pilot program for the crypto market, providing exchanges and investors with a legal testing ground that will both train their forces and stimulate capital in Southeast Asia. South Korea has also been unequivocal, with new regulations taking effect on September 16th, removing virtual asset trading from its blacklisted industries. The message is simple: we already have compliance and protection mechanisms in place, so feel free to proceed. The US, on the other hand, has set a clear precedent globally with the approval of a Bitcoin spot ETF and the implementation of stablecoin regulations. These three countries are working together, sending a common signal. Cryptocurrencies are shedding their speculative label and becoming a regular force. Who will be the biggest winners in the next 3 to 5 years? The answer is obvious. Compliant exchanges, stablecoins, and on-chain financial infrastructure are ready to embrace a wave of policy dividends. The Federal Reserve is truly easing its monetary policy this time. CME data clearly shows that the probability of a 25 basis point rate cut on September 18th is as high as 95.3%, essentially guaranteed. By October 30th, the probability of another 25 basis point cut is 23.5%, and the probability of a 50 basis point cut has soared to 72.9%. In other words, a cumulative 75 basis points cut between September and October is practically guaranteed. History has a clear scenario in mind. From 2018 to 2020, early tightening caused Bitcoin to fall, but a significant rate cut triggered a surge in stablecoins and a decline in Bitcoin exchange reserves, directly igniting the 2020 to 2021 bull market. A similar trend will play out in 2022 to 2024, ultimately sending prices back to record highs. The current situation is very similar. Stablecoin balances are recovering, Bitcoin is being moved to cold storage, and funds are waiting for the Fed to blow the whistle. There may be a short-term jolt, similar to what happened in March 2020, but as long as the market confirms the easing path, Bitcoin is likely to rebound. Simply put, interest rate cuts are the starting point for releasing liquidity and the trigger for Bitcoin's next bull market. ETFs, the bellwether for ETFs, have given the market another signal. ETF fund flows are beginning to diverge. Bitcoin spot ETFs saw $23 million in inflows yesterday. Despite the overall uncertainty, institutions are quietly increasing their holdings, viewing it as a stabilizing force for the broader market. Meanwhile, Ethereum spot ETFs saw a sudden net inflow of $44.2 million yesterday, not only reversing net outflows for the first time in 2 weeks, but also exceeding Bitcoins. This move strongly suggests that institutions are preemptively positioning themselves, betting on the long-term value of Ethereum, whether in DeFi, Layer 2, or restaking. Historical experience shows that a shift in funds often signals a reversal in the trend. If Ethereum can maintain this inflow over the next few days, it may outperform Bitcoin. Now that Bitcoin has stabilized its fundamentals and Ethereum has begun to counterattack, the market is likely brewing a new wave of rising prices. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining circles within the next 24 hours. Click the bell to join our channel and become a member, receiving your membership code Monday through Friday. This week, Nasdaq dropped a bombshell on the SEC. It wants to allow tokenized securities to be traded openly on its main board. If approved, this would mark the first time blockchain technology has entered the US financial system. Their clever move is to avoid forging a new path and instead integrate them directly into the existing regulatory framework, ensuring that tokenized securities receive the same treatment and obligations as traditional securities. This timing is perfect, as US regulatory stances are shifting. But don't forget, Layer 2 projects are also busy, with the SEC's crypto mom Hester Peirce recently sounding the alarm. The next big test will be efficiency, decentralization, and compliance. Who can survive to the bitter end?
In her speech, Hester Peirce pointed out that Layer 2 solutions that rely on centralized sequencers may be considered exchanges by regulators. She emphasized, if you have a matching engine where a single entity controls all components, then it looks a lot like an exchange. This statement directly addressed the industry's pain points and sent shockwaves through the rapidly expanding Layer 2 ecosystem. Finding the right balance between efficiency and decentralization has once again become a key industry focus.
When you offer a security, you have to do it in either a registered offering where you have to provide all kinds of disclosures, or you do it under an exemption. And the exemption might be conditioned on things like you can only sell it to rich people or to institutions, right? And so the problem is, if you're trying to release a token out into the wild, you really don't want to limit your audience just to rich people and institutions. You want everyone to be able to buy it. And so that was what the registration provisions didn't really contemplate.
To put it bluntly, no matter how technologically advanced an L2 project is, as long as it's backed by a publicly targeted centralized team, the SEC can easily force registration. With stocks and bonds now moving on-chain, the compliance pressure on L2 platforms will only intensify. Developers should understand that they shouldn't just focus on performance. They must factor compliance costs into product design and daily operations. Investors, too, should consider L2 projects beyond their technology and ecosystem, especially if they have a clear decentralized roadmap and compliance plan. Otherwise, the risks will fall entirely on you. Hester Peirce's words serve as a warning to the entire industry. If L2 platforms want to be accepted by the financial community, they must not just flex their muscles. They must also learn to walk the fine line between regulation and decentralization. Since the Trump administration introduced the Genius Act, the status of stablecoins has skyrocketed. No longer a trinket for the amusement of cryptocurrency enthusiasts, they have steadily made their way into the heart of Wall Street and major corporations. Now, they're even starting to impact the wallets of ordinary people. Who wouldn't want faster transfers and lower fees? The problem is, while this sweet treat is sweet for us, it's painful for small local banks. If they truly siphon off customers and deposits, they risk repeating the tragedy of the emergence of money market funds 50 years ago. A new war for money is brewing.
In August, Wyoming became the first state to issue an official stablecoin. The circulation of dollar-pegged stablecoins has reached nearly $250 billion, a year-over-year increase of over 50%. Standard Chartered Bank estimates that this will exceed $2 trillion within 3 years. Bloomberg Intelligence predicts that by 2030, the scale of stablecoin payments could exceed $50 trillion, accounting for 25% of U.S. consumer payments, up from less than 1% today. Some companies are even considering using stablecoins for direct payroll, bypassing bank accounts.
Banks' fears have finally come true. Stablecoins are about to start paying dividends. In the past, stablecoins were simply a store of value. But now the new generation of stablecoins has introduced a new twist. When you deposit money, the interest earned no longer remains with the stablecoin itself, but is distributed directly to you. This is completely different from established stablecoins like Tether, UST, and Circle, USDC, where the issuers previously took all the profits. Now it's finally the holders' turn to share in the profits. Imagine if even major companies start issuing these stablecoins, with salaries paying interest directly. Who would still want to deposit money in banks? This would be a real headache for banks.
A 5% discount cannot stop a 23% increase. Will Ukrainian retail investors buy into it or run away? Global crypto trading volume surges, India wins for 3 consecutive years, and a dark horse emerges in the Asia-Pacific region. 2 years of profitability and veterans in charge of the Vietnamese cryptocurrency market. Is this a sign of elitism? Alibaba missed out on Hong Kong back then. Will Ant Group make a comeback with the help of blockchain?
Vietnam's approach to crypto has been neither closed nor welcoming for the FII either top. For the past few years, leaving it hanging. But don't underestimate its status in the crypto market. A Tiger Research report states that 21.2 million adults in Vietnam have experience with crypto, with annual trading volume reaching $100 billion, among the highest globally. Previously, due to a lack of regulations, everyone flocked to platforms like Binance, Bybit, and HKEX. Now, local regulators are no longer restrained and are beginning to intervene. If Vietnam truly establishes rules, the market could change dramatically.
In terms of regulations, it's coming into effect in 2026. The ultimate objectives of any regulations is either protecting the country's integrity, financial system's integrity, and also basically protecting their own users. Basically, this is the two biggest main points of having regulations.
Vietnamese Deputy Prime Minister Hu Duc Phuc recently signed a resolution officially launching a 5-year cryptocurrency market pilot program, effective immediately. Under the pilot framework, issuers must be local Vietnamese enterprises, legally registered as limited liability companies or joint stock companies. The entire process, from issuance to trading and payment, must be denominated in Vietnamese dong. Crypto assets must be issued entirely based on physical assets and cannot be backed by fiat currency or securities. And crypto assets can only be sold to foreign investors through CASPs, approved by the Ministry of Finance. This move demonstrates Vietnam's commitment to exploring regulatory compliance while strictly controlling risks and ensuring market operations operate within controllable boundaries.
Want to become a CASP in Vietnam? Weigh your wallet first. The starting capital is 10 trillion Vietnamese dong, about 379 million US dollars, and it must be jointly funded by 2 large licensed companies, such as banks, securities companies, funds, and even technology giants. In addition, you must make money for 2 consecutive years before applying. It is not enough to just have money, you must also know how to make money. The requirements for senior executives are even stricter. The CEO must have at least 2 years of experience in finance or securities. The CTO must have 5 years of experience, and the technical department must be equipped with at least 10 professionals. There is no room for fooling around. Once the new regulations are released, it is equivalent to putting a tight rein on the Vietnamese crypto market, and the era of wild growth is gone forever. Next, whether the market can grow a new story in compliance and security depends on how it passes this wave of tests. Alibaba's IPO was a major spectacle back then. Jack Ma wanted to ring the bell in Hong Kong, but his insistence on different voting rights for the same shares was rejected. He even declared Hong Kong missed out on Alibaba. He then turned to New York. The 2014 IPO raised a global record $25 billion, bringing its market capitalization to $230 billion, briefly surpassing Amazon. In 2019, Hong Kong reversed course, allowing Alibaba to conduct a secondary listing, raising $11.2 billion, making up for the missed opportunity. Today, Ant Financial appears cautious about crypto, appearing to be not very interested, but behind the scenes, it's actively pursuing significant initiatives. Ant Digit is applying for stablecoin licenses in Hong Kong and other jurisdictions. In July, rumors surfaced of a partnership with Circle to move USDC onto its own blockchain. Meanwhile, Ant International is busy building a cross-border payment system, clearly inching closer to the crypto market. To put it bluntly, it's quietly establishing itself under the umbrella of regulatory compliance. What's even more exciting is that it was recently reported that they had caused another big incident. It seems that this financial big ant is going to make some waves in the crypto world again.
Honestly, I'm not that big fan of Bitcoins, but I pay special attention to the cashless society, blockchain technology. Bitcoin, the thing I want to know is that what value, what things that the Bitcoin can bring to the society. Behind the Bitcoin, the technology itself, really very powerful.
Media reports indicate that Ant Digit, a subsidiary of Ant Group, is promoting a major initiative to bring energy and power assets valued at over 60 billion renminbi, approximately $8.4 billion US, onto the Ant Chain blockchain. This initiative currently covers 15 million new energy devices, with real-time uploads of power generation and device status. Financing is being completed through tokenization, raising 300 million renminbi for 3 clean energy projects. Future plans include the issuance of tokens linked to these assets.
Honestly, blockchain has always been a favorite of Ant Financial, but when it comes to making money, it currently relies on selling technology solutions to businesses, such as privacy protection and security measures. However, this time, moving all of its energy assets onto the blockchain is a stroke of genius. It eliminates the need for loan officers and underwriters, eliminating the need for middlemen, swiftly raising funds, and significantly reducing costs. The data doesn't lie. RWA.XYZ reports that the on-chain value of tokenized real-world assets has doubled since the beginning of the year, reaching $28.4 billion this week. If this trend continues, many companies may follow suit and move their assets onto the blockchain, turning blockchain into a universal storage container.
According to Forbes, Trump's second son, Eric Trump, was forced to resign from his position on the board of directors of Alt-5 Sigma due to NASDAQ regulations. The Trump family had no choice but to pay the price. The Wall Street Journal broke the news. Trump wanted to fire Federal Reserve Board member Lisa Cook, but was directly put on hold by federal judge Jacob Cobb. This presidential show has now become a trailer for the Supreme Court drama. OpenSea's flagship collectibles program has added new items. According to the official website, they have already collected one each of Fat Penguin number 1647 and CryptoPunks number 5273. It can be said that the platform is putting its stamp of approval on leading NFT projects. GameStop disclosed its financial report. For 1,710 bitcoins on hand, valued at $529 million, with a floating profit of $28.6 million, but still a net loss of $18.5 million. It seems like Bitcoin is the bread and butter, while the main business is lagging behind. BlackRock's total crypto assets are $99.3 billion, including 750,417 Bitcoins and 3.706 million Ethereums. As for smaller coins like Image, SPX, and MOG, they're just pocket change for grocery shopping.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.